Yo, what is going on, guys? This is Chris with the Full Send Traders, and today we have another trading lesson. Today I'm going to be talking about how to trade inside of ranges, what I learned this week. I continuously make this mistake. However, every single time I learn something new, how to trade inside of a range, and ultimately how to manage our risk so we're not taking losses and we could take wins over time. Even if we're having bad price action, there's still going to be good opportunities. But let's get straight into the lesson. The first thing we're going to be going over is the dynamics of trading inside of a range. So here we have an example of a range. We have lows, we have highs, and we're staying within this range. Now, the key parts where we want to be able to find a trade is going to be either on the external range of the price action or during 9:30 to 9:45, the open of the market. So here's some key areas. Marking out this high right here, we took out this previous daily high in this instance. Coming over here, let's say this is 9:30 open. We come up, we find a fair value gap. This would serve as a great entry because we have this sell side down here and price has enough volatility for us to trade to liquidity. Now, where do people make mistakes? A lot of the time, people are going to be trying to find subtype of continuation. Maybe right here, they see us come up and then we end up going long because we see a fair value gap right here. Now, the issue is even if we have targets that are way beyond this, let's say we have some nice equal highs on the opposing side, because we're inside of a range, that's not going to matter. We're going to only be able to play inside of this range. And the best possible way that we're going to get a good entry from this area is going to be either on the external side or us catching a move at 9:30 open. Let's go look at some examples. Coming down here, now this is the range we're actually inside in right now. Since Monday, we had this huge move before market opened. Nobody caught it. It's a news move. You can't really do much with that. But coming into the day, obviously Monday is a no trade day because of that huge move. But going into Tuesday over here, we're going to have a pretty decent opportunity. So we have market open right here. We have a manipulation. We have some lows in here. Mark it out with the trend line. And price comes up, initially tags this 15-minute fair value gap. Now, what follows from that? So we had that 15-minute fair value gap. We had quite a bit of lows built up right here. Because it's the 9:30 open, we could expect a nice, beautiful move going into that liquidity sweep. Right here, if we went on the went on the lower time frame, about the 30-second, we would find a inversion fair value gap. But right here, I'm just going to be marking out the reaction based off of this fair value gap. So let's say we're pretty generous here. We take about 1 to 2. If we get in earlier, we're taking about a 1 to 3. So that would be a very nice trade. Now, let's say you continued to trade after this. What would happen? Look, we have a wonderful fair value gap. Price came down. We have clean closures. What happens? It gets absolutely manipulated. No follow through whatsoever. Why? Why is this happening? Because we're inside of this range. We're going to just come back into the range. It doesn't matter that we have more lows down here. That doesn't matter when we're inside of a range. Okay, we're going to come back and start taking more and more liquidity. But really, there's no other trade here. There's really not much of any trades the rest of the day. So that 9:30 open is going to serve wonderfully if you're trying to find a setup. Going into Wednesday over here, very similar setup. Price had already taken out the outermost external range right here. And coming over here, we actually had an SMT with ES. Now, something that somebody might mess up with right here is they're going to see this fair value gap, and it's going to be the same scenario that we already mentioned. They're going to say, oh, let's go long here. Like we have these highs lined up. We have even more highs lined up right here. But guess what? We're not getting any continuation. We're only going to get a manipulation. So because we already had the SMT right here at the high, that's marked out in blue with ES, price is going to count that as a liquidity sweep. We could actually look at this as an inversion, and we could go short right here. Beautiful short. And would you look at this? Price comes down. It misses the London and Asia low, these super important lows, by 3 ticks, three points. Like, this is manipulation at the max. And this is why you have to be very cautious trading inside of this range. You're only going to take a trade on the outermost external range or right at that open. That's where you're going to find the best setup. Now, granted, we did have a decent setup right here, but not really too many crazy entries at all. You see this is all chop. We're on what, the 1 minute time frame? I don't see a single fair value gap you could have entered on. So just not the greatest PA right here. That open is wonderful. Now, this is the trade that we took today. Price came down, swept out this low. And let's actually go over what I mentioned over here on Telegram. So I said, this is the night before. I'm already looking at price action. I say, hey guys, I want to see price come down, sweep this previous daily low. Because we're inside of a range, remember, we want to see that external range being taken so then we could trade back into that range, targeting some of the internal liquidity. So because price is coming down here, we're not expecting price to continue lower. We're expecting it to actually come back up off of that. So we have the new week opening gap, sweep out that low, you see right here. I say, just as we anticipated, now we need to see a bullish reaction on the lower time frame. Sure enough, we got it. As soon as we hit this low right here, price bounced up. It was a little unsteady at first. I wanted to see us close nicely above this high, pretty much right there. Took this long right here, and I know on some of my accounts I targeted these highs in here. I believe actually it was this high. Quick 1 to 3. Took some more partials in here. Now, something that's pretty interesting is we swept out that external range. Now, let's say we wanted to target these London highs, right? We're like, hey guys, let's look for some continuation, you know. And again, what did we talk about? You can't be trading inside of this internal range liquidity. It's not going to work. So we have that inversion right there, and literally the rest of the day we just dump off the complete opposite way. Now we had beautiful targets. Price is not going to meet them because we're inside of that range. It's going to do whatever it wants. This goes back to look for the external range liquidity, look for that market open, and that's where you're going to find an entry if you're trading inside of a range. But this setup right here actually had a inversion fair value gap, but it's really not the reason I entered. I entered for every other reason. So right here, entry, let's find the exact spot we entered at, 825. And then this account, I just exited at this liquidity right about here. So this is a trade we took. We had an inversion. I just talked to one of my students, somebody that I've known for a very long time. I mentioned to him, hey, don't be taking super small inversion fair value gaps. And look at me, I'm doing it. But the reason why it was still a good setup is everything around it is perfect. The entry model was not so perfect, but it doesn't need to be, because in reality, we don't trade an inversion fair value gap because that's completing the setup. We trade everything around it, and that's going to give us the good setup. So I'm able to kind of, if you want to say, break my rules. I simply did my own thing right here. I entered where I wanted to. I knew where price was going, and yeah, we capitalized off of it. Now again, guys, this week was pretty tough even for me, but this one trade made it all back, made it all worthwhile. I stepped up. I knew where I had to fix my overall edge so that I could still execute on the market. Now, if you're looking to get better every single day, you're going to need to continue to journal. You're going to need to find these tendencies where price action is going to show its hand, and it's going to tell you where it's going to run. this time if you missed it last time. If you guys are able to catch on to those tendencies, you're going to have a way easier time than just sitting there trying to chase the market. Look at every other setup today. That opening range from 9:30 to 9:45 has had all of the setups the past 3 days. If you just look back at that and you say, okay, I shouldn't have been executing after that, I shouldn't have been executing before that, you will succeed in this. But if you guys enjoyed this lesson, make sure you hit the like and subscribe button. I will be doing more of these. And of course, you'll be finding some of my bias, some of my setups inside of the Telegram. That's going to be linked all down in the description below. I'll catch you guys in the next one. Peace.